Hey everyone, welcome. You just got the closing bell for Thursday, May 30th. We were hoping to get some volume back into the market today, but we did not. You can see we're still hovering about 50% right now. So not that much volume in the market. So at this point, after GDP, if we didn't get the volume now, then we're probably not going to get it tomorrow either. So we're probably going to have to wait until at least Monday before we get volume back into these markets. We are also saying that we are flirting with the bottom of this channel when we opened it this morning. And because of what was going on in the TLT and the VIX, we felt like maybe we could bounce from there. Overall, our sentiment was that we would come down and hit that MA50, just perhaps not today because of what we were seeing in the TLT and the VIX. Well, we got the breakdown. it came down, we broke through this purple 524.5 level, and we even broke the EMA 20 a little bit. So we can't say that we're definitely through the EMA 20, but we are below it technically. So we could keep on moving from here. As long as tomorrow looks weak as well, then we're coming down and we're probably going to come down to that MA50, which is what we've been talking about all week, maybe even last week. I don't remember. But at the very least, since the beginning of this week, we were talking about coming down to that MA50. Looks like we are getting that. So we will want to look at the CPC. We'll want to look at VIX to see how strong the downward movement is. And then we will want to look at sectors. Everything else, momentum, all that, we already looked at that. That was what gave us the idea that we were going to come down. So now that we're coming down, there's no need to look at all that stuff anymore until we get to another region where it looks like we're going to pause. Right now, we're not there. So we're just going to take a look at our VIX, take a look at our CPC, then we'll take a look at our sectors. Well, maybe we'll take a look at what happened inside of bonds, and then that will pretty much color what we think will happen tomorrow and potentially next week, because earnings for this week are done. There's not going to really be any tomorrow before market open. So we are going to want to see today after market what some of these are doing. So a little bit later on or towards the end of this session, we're going to take a look at a few of these bigger ones like Nordstrom, Gap, Ulta, Dell, and Costco. We'll probably just Marvell. We'll just probably just take a look at those just to see and get us an idea of where we might be headed tomorrow morning. But let's take a look at everything else first. So actually, before we do that, let's take a look at how the other indices did. We have a tendency to focus only on the SPY, but looking at the other indices does give us a little bit more information usually. So QQQ also broke down below its EMA 8, heading towards the EMA 20, which incidentally is the top of this region right here. So that is going to be pretty strong support. But if it breaks that, then it's coming down to the MA50. Let's take a look at how semiconductors did. Semiconductors held its EMA 8, so doing stronger than technology in general. Let's take a quick look at communications, the other leg of tech. Communications touched its EMA 20 and then bounced back up and somewhere in between the EMA 20 and EMA 8 now. So let's take a quick look at NVIDIA, since that's been one of the stocks, if not the stock that's been propping up this entire market. Okay, and here we pulled back. Remember what I said yesterday, if we're topping out here and we pull back, then we don't have NVIDIA holding up the market anymore. And that was one of the major pillars, because not just NVIDIA by itself, but all of the other chips and AI type of stocks that were moving in sympathy with NVIDIA would have a pause or pullback as well. This I consider a pause because it didn't really come significantly towards the EMA 8, and it didn't really break below this low right here where on this gap up. So this is more of a pause. And what happened in the SPY and the NASDAQ? Exactly what we said would happen, because basically all of the strength was coming from NVIDIA and the surrounding stocks. So the SPY did come off because NVIDIA did not continue to hold up. Now, if NVIDIA moves back up, then that'll bring strength back into the markets, and then we'll just pop into that sideways range again. If NVIDIA continues to move down and pulls back to the EMA 8, well, that's probably going to be associated with a pullback down to the MA50, or at least very close to it. So we're going to want to watch NVIDIA pretty closely because it's still the bedrock of strength inside the S&P 500 right now, and especially the QQQ. So let's take a quick look at our VIX. VIX, you'll see the high was 1488. I think that might be a little bit higher than this morning. Let's take a look at see what happened in VIX. Okay, so we came close to matching it, and then we came back down. So there is looks like probably a sharp movement downwards in the last half hour or so. Yeah, you can see here all day long, we were just chopping in this very narrow range, just along. We didn't quite trade up to this purple line. We were crossing this 5-4 level quite a bit. And then finally in the last, call it half hour or 45 minutes of the market, we finally broke that line, came down and actually traded below the next purple line, but broke right back above it and closed right at this purple line right here. So all of that weakness started to show its hand towards the end of the market, which is, I was going to say it was similar to another day, but I'm wrong. So actually, well, this day, but that's a little too far away. So in any case, the weakness started to show up in the last hour of the day. That's when institutions start to position themselves. So it looks like we are having some movement into cash, or there is some reallocation and rebalancing going on. So we'll want to take a look at our sectors as well. And maybe if we see money moving into things like staples or the very defensive sectors, then we'll be more comfortable that the S&P could just stop at the MA50. If we start seeing a whole bunch of money just go into cash, that means institutions are a lot more worried about this downward motion. But so far, based on the VIX, it doesn't look like it. And we're on low volume, low participation. So I take it with a grain of salt so far. I would say that more likely that we're just going to pull back mildly to that MA50 right here. I haven't done a volume profile in quite some time. Let's take a look at volume profile. Okay. So we can see there is a pocket right here. We traded it sideways for quite some time, but it was on lower volume. And so you can see that these spikes are not as defined, or it's not as high. Over here, there's a large region encompassing from where we are right now all the way to this purple line. So, and that includes a larger spike right around the MA50. So it's looking pretty good. Maybe we'll pause right here. There's a little bit of a spike right here, so associated with this level, this upper range, this chopping that happened in this box, in the second half of the box. And then if we don't hold there, then that MA50. Okay, if we break the MA50, then it could get pretty ugly, because the next area of support is exactly at that MA200 right here. So that would be a correction. So that would be the larger correction that we talked about earlier this year as a possibility. Generally, we're looking for 2 to 3, 5% or so pullback, and then maybe 1, 10 to 15% correction, and that would be this right here. That would be 10.62%. So that would fit. That would fit. But right now, based on everything that we're seeing, I'm not expecting us to go down to the MA200. I think we'll maybe make it to the MA50. So, but we'll reevaluate when we get there. let's take a look at, what do we say? We said CPC, CPC. CPC at 1, perfectly neutral, so that's not giving us a lot of information. We haven't been getting a lot of useful information out of CPC lately. Okay, and so really what we want to see is a little bit bonds. Let's see what happened in bonds. Bonds did bounce up a bit and filled this gap, or at least half the gap. So like I said, if you wanted to exit that short that we put on over here and over here, then this is probably a good exit because we might retrace and get another opportunity to short. So if we do retrace to about 90 and a half, I'd be interested in putting on a put again. And so let's take a quick look at our sectors, and then we'll see how we're doing with our earnings. Stock sector. Overall, so we're just looking at our main. Right now, we've got risk, risk, safety, risk, risk, board of risk, or middle, medium, middle to safe, risk, safe, risk, safe, safe to medium, safe, safe, medium, risk, safe. So mostly in line. There are a few that were kind of out of order there, but pretty well in line. So the pullback is helping us get defragmented in the market. Let's take a look over the last week. Retail, communications, and utilities strong, and then today. Today is what we care about the most. SPY is down how much? 0.66%, similar to amount as yesterday, which was down 0.70%. So here we had home builders move up. That means they really caught a bid. Real estate and home builders really caught a bid because of that GDP report. So there are a lot of expectations now back into the market about the possibility of rate cuts. That's what this is telling me anyways. Home builders, real estate, those all benefit from lower interest rates. Same with utilities. And so they all caught a bid over here. That's the GDP interest rate. Let's look at our Fed Watch just to see if that changed from this morning. 14.3 in July. 12.3 lower. That's interesting. So the bonds did come off of their highs. It did come off their highs. So maybe we just didn't quite catch up in the stocks over here in these sectors. So money went in over here. That's really interesting. And then retail, but because of earnings, I'm not going to read too much into retail sector or the discretionary sector. Where's discretionary? Down here in the middle, up 0.32 when the S&P was down 0.66. And it looks like we've got money into some defensive or medium. Okay. So up, but mostly interest rate stuff. And then somewhat defensive sectors. So that's not making me feel great about upward movement, at least in this leg. At least money didn't go flying into consumer staples. And we lost money mostly in XLK and semiconductor. So it was exactly what we identified a little bit earlier. NVIDIA just took a breather. It paused. You can see that one of my indicators here are saying, hey, we're neutral now. We're neutral. So pause. Maybe consolidate and go sideways. Maybe pull back, but maybe just go sideways, just like the S&P did. Went up, made a new high, and then paused. Went sideways for 2 weeks. And then it came down. But NVIDIA, it doesn't have to come down. It could just chop sideways and go up. But at the very least, we went parabolic, and now we're pausing. And that's the movement. So this 3.77% downward. That's quite a bit, but in the light of the type of movement we saw in NVIDIA, it just looks like a normal bar, but it's actually 3.77% on 2.6 trillion in the market. So that dragged down the XLK and the SMH sectors quite a bit. So it just looks like we had a pause and a breather in the tech stuff, and that allowed the other sectors to rise up. So it doesn't seem that bad. It's pretty mild. Of course, the S&P did break down for the reasons that we talked about earlier, mainly that the strongest stock is no longer propping it up. But what it is implying is that it doesn't have a huge amount to drop, maybe just a little bit. What we haven't done, which we probably should do, is we should look at the XSP, the non-weighted S&P 500, because what does it do? When we looked at the momentum level, we said, hey, only about 37% of stocks were above their 50-day moving average. Now it's 42%. But what that implies is that we should see this price closer to the MA50. But we saw it, well, after today, it's closer, but it was significantly above that MA50. And so if we look at the RSP, we should see that we're probably near or even slightly below that MA50. RSP? Yeah, RSP. And so, yeah, see, we're below that MA50. We're sitting here at the MA90. It looks like we caught a little bit of support at that MA90 right here. So that just goes to show us that, again, if this support holds in the RSP, then we don't expect a huge downward movement in the SPY. We could just sit here at the MA50 because the S&P 500 and the RSP can come back in line at the MA50. So once I get 50% of stocks in the S&P 500 above and below the MA50, then on an equal weighted basis, my RSP should be at its MA50, and then my S&P 500 might have a chance to equilibrate with the RSP as well. So if I go in here and I compare RSP, you see that sometimes we deviate and then we come back in line, and then we deviate and then we come back in line, and now we've deviated again, and so we expect it to at some point to come back into line, and that means the SPY coming down and the RSP coming up, and they will meet around that MA50, and then we'll be back in line again. So everything that we've seen so far is simply suggesting that we have a limited downside. This is just a mild pullback, and it looks like that MA50 is going to be the area of strongest support. All right, let's take a look at any earnings that might have come out. So we have GPS. Probably gonna have to look at the intraday. GPS up quite a bit. So far, reacting well to the earnings. Nordstrom down quite a bit. Ulta mixed bag, down then up, then who knows. Well, so I'll just call that neutral. So I've got down on GPS at 8.3 billion, up, or sorry, up. No, it's down. GPS. It was up. Okay, it was up and then down on Nordstrom, but that is about half the market value. Ulta, we said was neutral. The scalar that's good for tech. NTAP, is this? Yeah, it is today. NTAP, Marvell, and tap neutral. Marvell down, but recovered a lot so far. So maybe neutral or just slightly down. And then Dell and Costco. Dell down, Costco down. Okay. So overall, especially since the last few were larger market cap, especially Costco, it feels like there's still downward dragging force on this market. Tomorrow, the SPY could continue to move downwards. And we can see that perhaps in sympathy with some of those earnings reports, it looks like we're curving down the aftermarket on the S&P 500 as well. So for now, our expectation is that we might continue to move lower, which would make us comfortably below the EMA 20. And then sometime next week, we could reach that MA 50 level, after which we will reevaluate to see if there's more downside. But at least from where we're standing right now today, it looks like the probability of us continuing below the MA 50 is pretty low this time around. Okay. So what does that mean for our portfolios? Well, we can start leaning our portfolios short-term bearish, medium-term neutral, long-term long, because we are still in bull markets here. So we can divide our portfolios in that way. Or if you have separate portfolios for your long-term views, for example, a retirement account might have long-term views, and that would just continue to be bullish. And then we might have medium-term stuff, for example, things that we might be doing for income, like monthly income type of trades, then we would just stay neutral. And if we have short-term money, for example, risk capital, then we would be slightly bearish, because there's just not that much room to go before we hit that MA 50. Or we might just skip it altogether and say this is a little blip, so we're just going to continue and we'll just take a 2, 3, 4 week view or longer and just say, hey, it looks like we're just going to at some point continue this uptrend until we're proven otherwise, until something makes us believe that on a 3-week plus basis that we could be moving downwards. But so far, higher high, definitely higher low. We haven't made a low yet. So if we bounce from that MA 50, that would be a higher low. So that would mean uptrend intact. It would have to break below that MA 50 and then get down to this purple line right here for us to have a same level low. And then we'd have to break it even lower than that to have a lower low. So right now, the chances of us changing trend is quite low. And we're just going to, for now, expect that we're going to bounce, but we're not going to position ourselves. Remember what I said this morning, we're just trying to capture the meat in the middle, not the exact bottom and exact top. So when we come and touch that MA 50, it's not time to buy. It's not time to go bull yet. We would wait for it to bounce and confirm before we went bull, or we would wait for it to hit and break before we went bear. Because what could it also do? It could hit that MA 50 and chop sideways. This MA 50 is not highly sloped. It is pretty flat. So it could just hit there and go sideways. And if you went bull or you went bear in anticipation of a bounce or a break, then you can be stuck in a time decaying trade and losing your money. So, or if you bought stocks, then you have holding stocks that are just chopping sideways and you're losing utility of your money. So either way, the best thing to do is wait for a confirmation and a clear direction, especially wait for volume to come back, because as long as volume is low like this, your ability to find good trades and move that will move is very limited. And as long as our ATR is super low, We're at the bottom range of our ATR. Yeah, we're pretty low, at least since COVID. We're at pretty low level, as low as they have been ever in the last 4 years. So that means my movement in the market is very limited. That means my opportunity is very limited, unless I'm just really good at picking stocks that will move. So an example might be we went 60 down 66. So today in one of our portfolios, the suggestions were CVS Monster and Texas Roadhouse. We got into CVS, expecting that to hit that EMA 8 and then move downwards. Well, we hit the EMA 8. Now we're just waiting to see if it'll move downwards. But the Monster down 1.71% when the market is only down 0.66%. So moved 3 times as much as the market. I can make money this way. If I call the market movement the random movement, then anything above the random movement is risk or is directional movement. And so the stock that I picked had a heavy directional movement. I can make money that way. Or Texas Roadhouse, we didn't get into this one because it moved up too quickly, and we were trying to get in at the mid instead of at the ask, and it just moved without us. But you can see, even though this looks like a more normal movement, it's still up 2.23%. That's almost 4 times the movement of the S&P 500. So that is a non-random movement directionally. So we can pick stocks very carefully, and this is why we call this type of environment a stock picker's market, because anyone can do very well when we get strong directional movement in the S&P 500 with conviction and with volume. But in order to do it in an environment like this with low volatility and low volume, well, you've got to pick your stock very, very well and very, very carefully. So in order to put everything and stack everything in our favor, then we want to be moving with the market. Because what if the market had moved downward with conviction also? There was volume and there was momentum and there was volatility. Well, perhaps the S&P 500 would have moved 1 or 2% like it did on this day, 1.25%, or on this day, 1.22%. So double the movement. Well, if I double that movement in the S&P 500, I'm not necessarily going to double the movement in my Monster. I won't necessarily expect it to go 3.5, but I would expect that additional movement in the S&P 500 to get added to. So I would expect this to have gone maybe 2.3%. And I would have made even more money. Everything, if we include the market in our movement, it just puts everything in our favor. It's sort of like saying I have a tailwind. I'm flying in an airplane and the market is also pushing me from behind. Well, I'm going to be moving a lot faster. But if the market is there's zero wind, then I'm relying completely on my engine. And if the market is pushing against me, then yeah, if the market is going down, I could pick a really good stock like Texas Roadhouse and still make it go. It can still make money on the upside in the opposite direction on the market, but it's just going to be a lot harder. And it's not going to move as much as it would have if the market was going with me. So we might as well stack everything in our favor. And at this point, the market isn't helping us. So we want to see that volume come back in. We want to see that volatility move back up. And then we will start to have an easier time finding stocks that can move quite significantly. And on that note, if we are hoping and we are expecting ATR to move upwards, or we're expecting volatility VIX to move upwards, then it's a terrible time to initiate sales. So if you have any sort of strategy where you're selling calls, like if you're selling them naked, or if you're selling credit spreads, then this is a terrible time to do it, because volatility, if it moves upwards, that is going to increase the value of all options including the ones that you're selling. So price might move in your direction and in your favor, but if volatility spikes upwards, it can erase that price movement, especially if the movement is small, like we've been seeing. But if volatility spikes up, then your options price will be more dictated by the volatility than by the price movement. And you could really lose your lunch. you could really get messed up on your position that way. So right now is an environment for buying options. Low volatility means if volatility spikes up, then my options become more valuable. If price also moves in my favor and in my direction, then I'm going to make money super fast. If price moves against me, well, I'm not going to get hurt nearly as bad because the volatility is going to move in my favor and it's going to net out some of that price movement, if not completely overwhelm that price movement. So right now is not the environment. It's not the time to be selling stuff. It's not the time to do iron condors. It's not the time to do verticals. It's not the time to sell options. It is the time to buy options. Yeah, I just want to make that note before we leave today. All right, guys, I think we've got a good picture of where we are. We're just going to expect a mild pullback for the MA50. Maybe tomorrow if we just get a bunch of weakness. But because we saw that volume profile where there was another spike right here in between where we are and the MA50, I don't think we will break through that tomorrow. I think we'll get the MA50 sometime next week. So that's it for today. We'll see just how much the markets are affected by the earnings tomorrow morning. And I will see you then. Have a wonderful rest of your day.